Jamie Dimon sees an economic hurricane coming. Are you prepared? You'd better brace yourself, Dimon told the roomful of analysts and investors. JPMorgan is bracing ourselves and we're going to be very conservative with our balance sheet.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
Before we watch on, please subscribe and leave me a comment that you have subscribed. Let me know what you think and what you would like to find out more about this recession. James Dimon is an American billionaire businessman and banker who has been the chairman and chief executive officer of JPMorgan Chase, that is the largest of the Big Four American banks, since 2005. Dimon was previously on the board of directors of the Federal Reserve Bank of New York. Dimon was included in Time magazine's 2006, 2008, 2009, and 2011 lists of the world's 100 most influential people. His net worth is estimated at $1.8 billion. Why he sees a recession. JPMorgan Chase CEO Jamie Dimon says he is preparing the biggest U.S. bank for an economic hurricane on the horizon and advised investors to do the same. "You know, I said there's storm clouds, but I'm going to change it. It's a hurricane," Dimon said on Wednesday, June 1, 2022 at a financial conference in New York. While conditions seem fine at the moment, nobody knows if the hurricane is a minor one or Superstorm Sandy, he added. There are two main factors that has Dimon worried are. First, the so-called quantitative tightening, or QT, is scheduled to begin this month and will ramp up to $95 billion a month in reduced bond holdings. The other large factor worrying Dimon is the Ukraine war and its impact on commodities, including food and fuel. Oil could hit $150 or $175 a barrel, he said. What are the signals? Beginning late last year with high-flying tech names, stocks have been hammered as investors prepare for the end of the Federal Reserve's cheap money era. Year-to-date Nasdaq 100 has fallen a whopping 23%. Dow Jones and the S&P 500 also have fallen more than 9% and 13% respectively. Inflation is at multi-decade highs, exacerbated by supply chain disruptions and the coronavirus pandemic, has sown fear that the Fed will inadvertently tip the economy into recession as it combats price increases. Now the Federal Reserve is between a rock and a hard place. After 2 years of yo-yo economic conditions, the Federal Reserve is trying to cool off inflation without tipping the nation into a recession. The buzz term for that is a soft landing, and that's the goal for the rest of 2022. Federal Reserve Chairman Jerome Powell warned that getting inflation under control could cause some economic pain but remains his top priority. Powell said he couldn't promise a so-called soft landing for the economy as the Fed raises interest rates to tamp down price increases running near their fastest pace in more than 40 years. He noted that with a tight labor market pushing up wages, avoiding a recession that often follows aggressive policy tightening will be a challenge. This is all happening with an already slowing economy. Jamie Dimon sees huge volatility. The market is still getting used to QT and rising interest rates. Every interest rates increase has seen the market reacted. With Cleveland Federal Reserve President Loretta Mester said in June 3, 2022 that she doesn't see ample evidence that inflation has peaked and thus is on board with supporting a series of aggressive interest rate increases. "I think the Fed has shown that we're in the process of recalibrating our policy to get inflation back down to our 2% goal. That's the job before us," Mester said in a live interview on CNBC's The Exchange. Recent statements from the rate-setting Federal Open Market Committee indicate that 50 basis point, or half-point, rate increases are likely at the June and July meetings. Officials are then likely to evaluate the progress that the policy tightening and other factors have had on the inflation picture. A basis point equals 0.01%. Are you ready for this recession? JPMorgan is bracing themselves and we're going to be very conservative with their balance sheet. They have started to push their clients to move their lower quality deposit called non-operating deposits into other places, such as money market funds, for example. That would help the bank manage its capital requirements under international rules, potentially helping it absorb a surge in bad loans. How about you? Thanks for watching. Remember, subscribe and leave me a comment that you have subscribed. Let me know what you think and what you would like to find out more about this recession. Or what kind of video you would like to see from Namus Edu TV. See you again.